Ownership is the best way to build wealth, and buying a business is the fastest way to get there. Now, here are your potential sources for a down payment to buy a business. One, obviously you have your savings. Two, you have your home equity. So you can use something like a home equity line of credit or a HELOC to unlock any equity that you have in your home, typically above the 80% loan to value mark. One trick here though is you want to set this up before you start your business search so that the loan can age before you go and actually try and apply for a loan to buy the business. You can access your investment accounts by selling your stocks or bonds, but another option that can also be better if you have embedded capital gains in your portfolios is to use a asset secured line of credit. Just make sure though you don't borrow too much so that you don't get that loan called if stocks or bonds were to go down in value. You can take a loan of up to $50,000 from your 401k if you plan to stay with your current employer. But you may not want to do this if you plan to leave, because if you leave your current employer, you either need to pay back the loan or you need to pay ordinary income taxes and possibly a penalty on that $50,000. So if you're planning to leave the business, it can become rather expensive. And if you are planning to separate from your employer already have, you can use what's called a rollover as business startup, a ROBS structure, to access your IRA or 401k. And basically what you do is you just buy stock in your own company the same way that you would buy stock in something like Apple or Microsoft or General Motors. One downfall to this structure is that you do have to structure as a C Corp, which can add some complexity and an extra layer of taxation. But often for most people, their retirement savings is their only real large pool of capital that they have to access. But keep in mind, buying a business is riskier than investing in, say, an S&P 500 fund or most mutual funds that might be available through a 401k plan. So keep in mind, it is much higher risk. Obviously, it has the options of much higher rewards, but we would consider a ROB somewhat of a last option. If you have money available through other sources, you probably want to use that first. Well, lastly, you can find one or more investors. Now, the returns for investors can be quite good, so it might be a little easier than you think to find people willing to invest if you have a good project for them to invest in. Now, any investor is going to want to own less than 20% of the business because that is the threshold for having to sign for the loan. So anyone who owns more than 20% of the business is going to be part of the personal guarantee for the loan. So you can structure this however you want. There's really infinite possibilities. But just one example is you could think of, you find an investor that puts up 100% of the down payment, which is only 10% of the purchase price. Say you make them just under 20% owner in the business for that investment. So they've put in 100% of the capital. They end up owning 20% of the business. You get 80 because you signed for the loan and you're going to do most or all of the work. Now, taking that example and just assuming, say, a 3 times cash flow multiple, which is kind of the average of the businesses listed on bizbuysell.com. In that scenario, the investor should expect to make about 25% per year as their rate of return. So most people are going to be pretty happy to put money to work at 25%. So let us know if we can help you purchase a business. Leave any topics or questions in the comments and follow us for more.